Good morning and welcome to today's live show. A little bit of a rough night of sleep, but that's okay. We're back here today for some stock market analysis, for some technical analysis for the SPY Qs, Aapl, Tesla, Amazon, Nvidia, AMD, and Meta going forward. Make sure to like as you do watch this video, and make sure to, if you're not watching this live, tune into the last 15 minutes because today we're going to give you a little 15-minute breakdown at the end of our stream this morning. So we got to pay attention to a lot of things. First off, those daily ranges for the day, they are up on your screen, 548 to the upside, and I do have 494.34 to the downside. So not the biggest move today for the SPY or the Qs as it goes forward today. We'll notice for the SPY, what do we have? We have 557.41 to the upside and 553.15 to the to the downside. So we're still looking like we could experience some volatility because volatility is starting to hold up a little bit better. Okay, now the 2 hour looks like it may cross today. We'll have to find out with Jerome Powell talking at 9 a.m. So we're going to pay attention to that very, very closely. We may even watch some of it live to just see what's going on over there, give us something to watch throughout the day. So if you want to watch Jerome Powell, we can watch that today. I'm going to have that up for us ready to go at any time. That starts in about 35 minutes. The market opens in about 6 minutes, so we have to pay attention to that. Let's go look over at a few other things going on. As of right now, dollar still trailing off a little bit, not necessarily the most dramatic upside move here for the dollar, so that's interesting. We'll see what comes from that. We have the yields moving around just a little bit here this morning before Jerome Powell talks. And then something I wanted to really pay attention to was AMC. I think AMC, we really got to pay attention to this as a huge signal was confirmed saying upside for the daily momentum. So right now, daily momentum is with you and we might see something crazy. But for now, you're not seeing anything crazy. In GME, we're not seeing anything crazy. Maybe we gotta spray some mayonnaise on this for a second. There you go, get some mayo on it for a second. But overall, we just want to pay attention to the signals. As of right now, GME has not confirmed that daily momentum. Weird price action here. Well, weird behavior from the Bollinger Bands, just really starting to boom, tie down like this. So this could be because of the options market at this point, maybe less implied volatility coming in. So boom, it's not expecting to have a big move. So these are getting closer. Now you're getting tight again. So we'll pay attention to that going forward. But a couple of things across the board. We want to keep our eye on Nvidia, seeing this upward move. Okay, seeing an upward move. The 2 hour is still positive in positive territory, did not roll over yet. Looking at a 30-minute here for Nvidia, hey, that thing crosses up positive territory. We can see a positive move one more time. So this is just where this one was a little bit more complicated to trade. A lot of these that look like this are very I like them to be smoother, right? I like them to have some curvature to it, to really tell me that momentum gave it a try to go higher and failed with the indicator. That's really what I want to look at. And I think an example of that might be this guy right here. Where is it? This one here. So a better example of how you're going to see some of these downturns might be in a different stock like these, right? We reject and things like that. You see the smoothness down here with these divergences. Yeah, this one played out for some kind of bounce. We went deeper. You made another one. So I'd more so be looking for these little divergences that actually look a little bit smoother to get that downward move. So like this one right here. So on the 30-minute, if you compare this to what Nvidia is doing, this one looks a lot more clear, right? You see the wave in it, you see the downward move in it. We cross down, we head below the center line. Like all of this looks great. And then you say, okay, manage the trade. Okay, we curl back up, we curl back down. Okay, it's looking like it's close to negative territory. Boom, curls back up, manage the trade, curls back down. Now we're in negative territory again. So we have to see what's happening with this. As of right now, you need to make some kind of stronger base. It looks like you're trying to do that right now. We'll see what happens with this if we head a little bit lower. But this is more what you want to pay attention to, these smoother looks. And I think that's something that Nvidia really doesn't have. Now, even Aapl heading up to higher levels, you see the indicator telling you like, hey, this is a short squeeze. That's just what that means because this thing is just pointing straight down while this continues to go higher. So we'll pay attention to that today. But as of right now, we have weekly expected moves over on Patreon. And we have that course down in the description as well. But right now on Patreon, you can get those weekly expected moves, and that will really help you out with a lot of these stocks. Tesla this morning. Remember Tesla, this one actually did have a little bit of a rejection divergence, so it could experience some weakness here. It tells me, hey, this 2 hour could get some kind of pullback. And the 2 hour looks like it's about to cross, so maybe we need to read into that a little bit. Remember, Tesla can see big moves up, big moves down, because it has a very large implied volatility for the whole month of July. It actually has the highest implied volatility of all the stocks we cover, obviously except for AMC and GME. So a couple of things going on there, but for now, I think 2 hour pullback for Tesla looks a little bit likely. Short Fridays, thank you for donating $5 to the chat. My enthusiasm for trading has been renewed by watching your live channel and becoming part of the team. Awesome. I love it. I love it. I love it. I love it. Let's go. Take that profit today, you guys. You know, make sure we're doing all the right things. Trading like water. All the things that include trading like water, being adaptable, being a flip-flopper, managing your trade very tightly. Let's take it very seriously right now because we're in a serious time. We got some serious things happening today. We got Jerome Powell talking at 9 a.m. That's in 30 minutes. So let's see how the SPY wants to open up today. Well, it wants to open up a little bit higher. So remember the 15-minute. We said this curls up, positive territory. Now, as high as this is supposed to go, 557.41. So we're going to watch this morning, see if we're able to get to that 557.41 before Jerome Powell even talks. Because if we get there before he talks, well, we already would have a 68% chance to land down beneath that line. Remember, this is our 68% zone, 32% chance to see something crazy outside of this area, but 68% of the time we land right here. So if we start to see a reversal signal right here, it might mean they're not liking what Jerome Powell is being asked, what he is saying. And so very important to pay attention and trade like water. Trade like water also means take profit, guys. It does. It means in order to make money, we talk about this pretty often, but I like to say it almost every single day. To make money in the market, you have to take profit. You have to hit that. It's one of the hardest things to do too. To hit that sell button when something's going up. It really is very, very difficult, but you want to make sure to capitalize and make money instead of trying to make $1 million in one day. The slow way is the fast day. The slow way is the fast way. So what are we paying attention to? Well, we're gapping up this morning, but the weird part is volatility gapping up or going up a little bit higher as well. So we'll pay attention to that going forward. As of right now, paying attention to the SPY, seeing it fade a little bit early on. We'll pay attention to it throughout the day, see what's going on here. Good morning. Good morning. One key rep. Good morning, Jeremiah. Short Fridays. Thanks again for the $5. Really, really appreciate it. Mr. Wynn. Good morning. Azadine. Market signal is going high, bro. I don't know what that means. Stocks with Dallas. Learning a lot from your course. Learn to manage my risk has helped me a lot. Just wanted to give you a shout out. Thank you so much, Stocks with Dallas. Yeah, I don't think a lot of people would tell you like how to individually manage your actual trade, like within every single trade based on the time frame, and I thought that was a really powerful video, so I really appreciate that. Can you check Play for me? Is there a stock called Play? And good morning, making money. And signals are actually continue to curl up higher, Azadine, as you're mentioning here. They do continue to curl up, so you have to play the signals that you are given. You can't get this underlying thing underneath you that says like, oh, this has to crash down right now. This has to crash down right now. Just know that we're in a vulnerable place and play the signals that are in front of you. And maybe we just do things a little bit quicker, like taking profit a little bit quicker in this kind of environment. When you have a win, make sure it's a win, because there could be a moment where something is ripped away almost at any time. Like really, by the end of 2024, you're looking at pretty much the end of 2024 leaking into 2025, going into maybe February, maybe March. You actually can see something bad happen. So if you know, hey, something really bad could happen in the next, say, 8 months or something like that, you'd be like, okay, let me just take profit a little bit, or let me just treat it like, hey, any moment that I see reversal signals, I need to be careful. I need to just be a little bit more careful. It doesn't mean you can't play the signals. Right now, SPY curling up, positive territory. If that bar holds, hey, the most likely thing is we're going to go up to 557.41. And then we have to see from there, is something crazy going to happen, or are we going to make a point of divergence here? So point of divergence really close to negative territory. That would be very, very telling. We're already getting overbought this morning. So if we extend up to there, watch out by 9 a.m. This is the retail hour, right? So the retail hour is going to be very important to pay attention to, as a lot of the time the first move during the retail hour isn't necessarily the right one. All right, let's look around at the Qs real quick. Going up towards, monthly expected move. We just tagged it, so 548, a little bit higher than here is where we're expected to go. Looks like some moves happening for the Qs, one of those being Nvidia, massive move up. And now we're seeing, hey, we might have a point of triple divergence on the 15-minute, but we're still within this channel. We're heading higher. So let's look at some bigger time frames right now. The 2 hour still pointing up in positive territory, still going. Remember, if this daily curls up, that is going to be a sign that we're actually going to head higher, right? That is what this is telling you. The probabilities would be with you that if this thing curls up right here, hey, we're going higher. Hold on one sec, my buddy's calling me. I gotta answer this real quick. Alrighty, we're back. Good morning, Matthew. Good morning, Bernie. Yeah, so any crazy moves happening out there, shout them out, because we're seeing some interesting things go on. GME catching a little bit of a bid this morning. Now that curling up on the daily is the most important thing. And now for AMC, remaining curled up on the daily is going to be the most important thing. The longer you can remain positive, hey, that's a good sign, especially if we can at least take back this 200. But remember, getting above 579 is where we could see something crazy. So we'll pay attention to that this morning. Josh, good morning. Meta's moving. Let's go look over at Meta real quick. Meta's moving a little bit here. On the daily scale, still looking for a pullback right now, really. You see the blow off top kind of behavior here. Now, this is overall like an elongated wedge here, but it could be more so a channel depending on how we draw it. So we'll treat it like a channel right now. What are we doing? Well, we're bursting above it. So one thing we could do is kind of like clone this bottom one, see if we're actually at a point where we're bursting out. I would say maybe just put it with the high there and see. But for now, what do we notice? Well, it doesn't necessarily have divergences up here. Sure, you have it across the way. You might have it on like a weekly or a monthly scale still. But for now, you would say a daily pullback would make sense. So we want to look for some of those signals. Are we seeing that signal on the 2 hour? Yes, we are right now. You're seeing a reversal signal on the 2 hour right now. But this can elongate for some time. You're not like right next to, you're not really like really close to it like this. You're more so a little far away. So if it wanted to have one more rigged move, something quick like this, I think that would make sense. But for now, I would say this signal right here looks pretty good. You have divergence on the MACD, you have divergence on the RSI at the same time. So there could be some weakness in store. That's Microsoft. That's Microsoft, guys. Sorry, Microsoft, but take that for Microsoft. All right, here we go. For Meta, you actually do not have necessarily 2 hour divergences. You see this one across the way. See what I'm saying? That quick move up, it just did not play out. Now, it did give some weakness, but it just did not fully play out to curl over and really make this daily start to crash back down, which it actually did curl over the daily MACD here, and then it just reversed back up. There's some of those rigged moves. That's why managing the trade is so great. So it's good. Stocks with Dallas, you know, reading into the learning how to manage the trade in the course. Very cool, because this can happen to you. And if you're managing the trade, oh, none of that hurt you, right? It might have hurt you a little bit, but overall, very, very good here to manage the trade. So very, very cool. Looking on a 30-minute, we're just noticing this. Hey, we curled down, we're by the center line, we curl back up, we see positivity. Maybe we look for a daily expected or a weekly expected move or something like that. Let me get those up on my other screen here. Gotta flip over to this. And if you're part of the Patreon, we might be putting out some videos today. We might be putting out a video this afternoon to talk about these weekly ranges and see what is going on, if anything can form, anything like that. As of right now, Meta, very, very, very far away from an expected move to the upside. So right now, actually, you're closer to the downside expected move. So interesting to see that with Meta. If we look at this on the daily scale, it just looks like this isn't like the best thing in the world, but it could say, hey, this all could be building up. Maybe we're able to curl down, go to a point of liquidity like in all of this, and then we see that turn back around. So we'll see what happens with the earnings, see what happens with the daily chart, if that's able to curl down to that center line, actually, not just curl down for a brief moment, but actually get a pull back down to that center line and then curl back up. We'll pay attention to that for Meta, and we'll be very cautious around earnings this time around. You got to be very cautious at these levels with earnings, with how the SPY and the Qs look, with what just happened to Bitcoin. We have to be on our toes. It doesn't mean things can't go higher. It just means we need to be on our toes and maybe look at this as a 50-50 flip and say, hey, I'm just going to react based on whatever happens with that data. That's what I would overall say about that. Now we are seeing GME up now almost 2%. So we'll pay attention to that. The Mayo really helping it out. AMC not really getting a ton of help from the Mayo today, up 0.73. But yesterday it was really, really working out, right? It looked very good yesterday. And we got all the signals to pretty much turn up in our favor. So as of right now, we were looking for that 30-minute to curl up. It remained curled up. Now you need that thing to stay positive. If that curls down, that does mean there is a pullback, right? That is your momentum telling you you are in a pullback. That is very important to understand. Stack the silver. M7's here. Good morning. Good morning, Martin. Good morning, Dean, Landon. SMR confirms some divergence there. What time frame are you looking at? Ooh, that's gonna be a 2-hour, isn't it? Yeah, see, oh, this is great though. Okay, so Landon, this is much, much better. This is much, much better, okay? Oh yeah, we'll look at Disney in a moment. I thought you were saying Dis, like shout out to Dis or something. Here you go. This is more smooth, isn't it? Right, we were just looking at Nvidia and showed you how it's kind of wonky with the divergences. This is saying down, up. Ooh, that momentum's really starting to fade if that curls back down. So this here could be leading towards a daily pullback. Look at that daily screaming higher. That daily could then pull back. You actually have a flatness in the RSI here. So this could curl over and we could see some kind of pullback before that actually wants to head higher. Now, the reason we're talking about some kind of pullback is because you're very far away from the center line. So unless it's going to be really, really dramatic, right, which you don't really want to bank on that, you more so want to be like, okay, let me pay attention to this. If it happens, great. But if it curls back up, I need to make sure to manage that risk. Very, very good. That one looks great. Let's go look at Disney real quick. Disney, this one here, I believe I was talking about this one and just showing the daily divergence that's there, right? We talked about this one not long ago. We actually used Disney to show you guys how to invest during a live video. We showed you guys investing on the monthly chart and how it would have played out. And Disney was one where every single time the monthly curled up, you could have made like 20% per year. It was very, very good. And look at this, daily is telling you that the momentum to the downside might be dying out. So this could curl up. So I want to find a signal that could tell me if this is going to curl up. So what I'm going to do is click into a 2-hour. I'm going to see, hey, there is some kind of double bottom forming as of right now. Now, is that going to actually go positive, or is that 2-hour going to roll over for just a brief moment? So I'd really pay attention to if this rolls over. Right now, the look of this, I would really more so like it to get some kind of bigger bounce, then drop back down again and then see that happen. I really would like that because I would get us close to the center line, curl back down, curl back up, right? So getting close to the center line is very, very important. If you took the course, I know a few people took the course yesterday. If you already took it, then you know how important this center line really is. for each and every stock that we are covering on this channel. Now let's go over and look at Sofi. Let's look at the difference between this one here. Sofi, a lot of people interested in this guy. Right now, you do have that 2-hour divergence that is trying to form. We'll see if that can turn back around. That's very important. Now, is the daily about to cross back up? Okay, well, the daily just crossed back down. So as of right now, we have to be negative on the stock. But that doesn't mean that this can't turn back up. Right now, you're creating that point of divergence with that 2-hour divergence as well. So let's zoom out on this real quick. Just looking from this standpoint, we would say, hey, this doesn't look like a hard crash or anything like that. And maybe this is actually an area where we're going to catch a bounce. We'll have to see. That daily momentum does have to turn up. The only problem here is you're still pretty far away from that center line. So I'm guessing we do a bunch of this business still until earnings. I would really hate to see us get like excited before earnings and then just see that rug pulled. So I don't necessarily want to take too much into consideration with earnings. Maybe a 4-hour would clean it up. Yeah, I think a 4-hour would clean it up. If the 4-hour turns down, turns back up, positive territory could be there for it. So that's something I would pay attention to. We don't do 4 hours a lot because I like the quicker signal, just the 2-hour. But the 2-hour is showing you the similar thing. So the 2-hour might create this divergence as well. We saw the divergence here on the RSI that led to some little bit of a bounce, but mostly sideways price action. Now we're looking for that to actually go positive soon. If that's able to happen, it could mean some good things. SMCI, this one here was popping up, and someone was asking, hey, could this get back up to 960? And the real answer is it could, because of this right here. The daily momentum is turning up, so you could see that good move. What I wish I had was some kind of range for this. I didn't make a range for this one because we don't cover it all the time in the YouTube videos. So we mostly just cover the stocks that are on the right side of your screen. So what we're paying attention to here is daily momentum has confirmed up. We're kind of in some kind of channel. We have a 2-hour that's crossing up, starting to get a little overbought. We'll see what's going on with this. Right now, we're building a lot, though. You see, we're just building a lot of liquidity from this price all the way down to here. We're in this almost like box where we're just building, and then we see these almost trap-like behavior happening across the way. So pay attention to your signals. If the 2-hour curls back down, not the moment, but as of right now, you have daily momentum pointing up, which is a good thing. What's my opinion on Zap? Yeah, we looked at Zap a little bit yesterday. Let's see what's played out with that. Boom, to the upside. So this is where, the 30-minute never crossed back down. So what do I always say about all these meme stocks? Yeah, it's hard to chase at these levels unless you look at like the daily scale, and that's not too beat up, but this thing could just keep going. The thing is, if the 30-minute ever crossed over, like, hey, that's potentially not the moment, and then that curls right back up. Okay, now we're in the play. So this has not curled back down, and so this is looking pretty good. Until that thing curls back down, I can't even say pull back for Zap. Looks nice. It's just I'm not someone who likes to chase moves. I like to see the move, be in the initial move, and then like take a little bit of profit to break even and let the runners run. You know what I'm saying? And then cost is running as well. So now today, what did we talk about yesterday? Yesterday we talked about and cost actually down a little bit with a green bar. So maybe on the 15-minute you have a divergence forming. You kind of do. But the 30-minute crossing back up is what you want to see. So this is what I'm talking about when it comes to Zap. If you were looking at Zap just with me a second ago, notice how when we curl over on the 30-minute, it's not the moment. No upside potential there. Now you can see times where it just crosses up the next day and you want to say, okay, that's off to the races again. But for now, you would more so from a management of risk, just say if that 30-minute ever crosses over, it's not a good sign. And that's what it means right here. So you need this 30-minute to cross back up. That would be a good sign that you're going to see more positivity in the move. As of right now, to me, it looks like they might be trying to fight AMC and GME today. We'll see. Let's look at what Chewy's doing. Chewy is down a little bit as well. So maybe there's a little bit of a fight going on across the board right now. You do have a 30-minute that looks like it wants to go positive, but really paying attention to that 2-hour crossing. You need some strength out of this, getting above the 9, get above that 20 on the 2-hour, and then maybe you can be off to the races with that curl up on the 2-hour. But the only problem here is you're still negative, so you still need that to go positive. If Powell announced rate cuts, I actually don't know necessarily what would initially happening. You could see breadth actually come into the market if people get overexcited. I think Path was, or I think Kathy Woods was a total idiot for buying this when she did. We talked about this before. The reason that this was a very, very dumb buy was because of one thing, one rule that we really, really say. We say this all the freaking time. We say it all the time and people still do it. Path right here, right on this bar right here, we said, you know, people were asking me about it, and I just said earnings is a 50-50 flip. Earnings is always a 50-50 flip. They can report good numbers and say something bad, and the stock will go down. And then what happens with Path? Well, it gets good numbers, and they say something bad, and it goes down. Now, where did Kathy Woods buy? She bought right here. It's literally, she bought right there. So she bought pretty much the day before earnings is when it came out that she bought. So the day before earnings, if she bought the day before earnings, that's just not what you're supposed to do. I've been beat up like this before too. It's no shade to Kathy Wood. I just think that she more so would learn from what we talk about on this channel, which is this is a 50-50 flip every single time. This is a 50-50 flip every single time. So that tells me I should stay away from it and look at that initial move, because right here, again on the daily scale here, like this, if I can't draw right now, but there we go. Okay, something was lagging. Let me get rid of these lines real quick. Okay, so the daily curls down. Okay, not a good sign. Now, what we would like to see from the stock is this curls down briefly, not dramatically, just kind of curls down briefly, creates that point of divergence, gives us some sort of tapering here along this line right here. You see how those touch this line right here would be nice. And then you see this come down to something like 950, that curls back up and goes positive, right? We see something like this. That's what I'm overall looking for from Path to actually see a significant bounce. That's what I would say. And then after that, I'm really only thinking we go test the 200, see if we can get above that. Market's going to crash. Oh my God. I don't know about that, Scuba Steve. This problem could go on for as long as they want. Right now, you're in a monthly trap, so it can go on for even a couple more months. It can go on for till pretty much it can go on till the first quarter of 2025. Hard to find an entry point right now. Hey, I get that. Mostly if I'm struggling to find that entry point, I'm looking at the SPY. Volatility's kind of already crossed up, but I'm looking for the SPY to give me some kind of signal that there could be weakness up in these areas. And then I'm only doing that play for a couple of days, right? So what I'd be looking at is the 15-minute, is the 30-minute, just seeing if those things can curl up, give me some kind of reversal signal. Thoughts on the Intel pop? Ooh, pop and drop. Okay, 30 minutes still needs that pullback. So what you're noticing here, first of all, on the RSI, you got this flatness. So that's telling you, hey, a pullback could be coming. That's pretty much what that's saying. The probabilities of a pullback are here. And so we're curling down. So the thing about Intel, this is a very good move. It's a strong move. So this 30-minute might just move sideways or pull down a little bit and then curl right back up, positive territory. We don't necessarily have reversal signals here, but you could see that go like this, curl back up, maybe come down over time. But for now, that would be the most likely scenario is if this 30-minute curls down, you're in some kind of 30-minute pullback. If we go look at this on the daily scale, that thing's starting to ramp up. So it could need the pullback to head higher. I'm not saying this is a bad thing by any means for Intel. I'm just saying it might need to go down to gain some of those buyers, maybe even fill this gap, reconnect with the moving averages, and then use those to bounce up. And that all could happen in this 30-minute pullback, so we'll pay attention to it. It seems the Mag 7 are becoming too big to fail. It's pretty much been that way for a long time, right? It's been that way for a long time. Because if they fail, we'd actually see things start to unravel. We'd actually see the market not be able to recover, less money being pumped into the system to save the market every time. But I don't know if that's going to happen because the Federal Reserve exists, right? The Federal Reserve exists. Therefore, any kind of pulling down of the market, you want to say even on a monthly scale, if the SPY or something like that actually does complete this and head down to lower levels, what they could do is they could just stimulate the market right here. Or maybe they just, at some point, this wicks out like this, and then they stimulate the market down by these 2020 levels again, and then that pops back up. So this signal is still something to pay attention to. We haven't necessarily seen that weakness come in, but I really do believe that we're going to see some kind of downturn, then some kind of upturn, and then that will be the moment. So I think sometime going into the election is going to be more the moment to pay attention to. As of right now, do you still have divergences on the daily scale? You do. But are they clear cut? Like, that's the thing. Are they clear cut divergences? On the monthly, it looks pretty clear. But on the daily here, it's just looking very tight. So it is smooth in the tightness here, as smooth as it can be. But you want this to really have some flow to it to get that divergence, to really convince you like, hey, this is coming down, then curling back up, and then coming back down. That is more the look that I want to see before we see some kind of crash. Because a lot of the times that's what happens. DJT looking good. Let's go look at that guy. Let's go look at DJ Tickles. DJ Tickles. Okay. All right, this one here, daily crosses up, going to be a good sign. Why? If you take back the 9, you take back the 200, swing traders can get involved. Now let's go into a 2-hour first, and we'll notice here, hey, it's kind of making that higher low. So we talked about be aware of the higher low. Right now you're curling up, so we'll see what happens with this. And then you got to watch out above you. But for now, you would say, hey, a big move can come. Why? Because this is closer than the last time to positive territory. So that tells you a positive trend could be there if that curls up. 132 Coinbase. You shorted Nvidia at 132 here. I mean, it makes some kind of sense. The 2 hours starting to get cooked. You're at the top of a channel. Like, it makes a little bit of sense. You have a bunch of little divergences up here. Like, I get it. But for now, you just want to really be aware of what's happening on the bigger time frames. Let's even just go into a 4 hour and see how that thing is curled up. Right now, the 4 hour momentum is saying up. Okay, the 4 hour momentum is saying up, and that's very, very strong. If the 4 hour momentum is saying up, the daily is about to cross, it might actually mean more upside. Now, the 30-minute is still up in this area. We're a little bit cooked. So let's go look at how high Nvidia is supposed to go. Well, for the entire week, Nvidia is pretty much supposed to go to 133. Where are we going? Well, we're going to 132.11 from what I saw, so it could go just a tiny bit higher. So unless we're going to see something crazy again this week, we're actually adding up to seeing some kind of, weirdly enough, maybe a lower high comes out of this if we see something dramatic go on with Jerome Powell and the AMC and GME. AMC and GME, you have to pay attention to if those are curling up into positive territory right now. So AMC already is on the daily scale. GME struggling just a little bit, and AMC coming down a little bit. So now we have to really pay attention to the 30-minute. Sorry to kind of flip back and forth, but we got to move around as we see these things. And what are you noticing here? Well, the 30-minute curls down. That means, hey, probably not the moment until that's able to curl back up. That's just how you use the shorter time frames to see what's happening with momentum on the daily scale. We got to see if this can curl down, curl back up, or just not cross at all, right? Not cross at all. But for now, it looks like that might be a likely scenario. GME seeing that fade as well. So I think we got a little fight on our hands today. Let's see here. We got 4 minutes, by the way. 4 minutes, and we'll. Do you guys want to watch Jerome Powell? Cost going crazy. Where's the halts? Well, we can teach you guys, see if there was supposed to be some kind of halt in this, and also like a lot of the halts happen with the. Yeah, a lot of halts happen too because of options market stuff too. But this here should cause some kind of halting, 15%. In 15 minutes. Yeah, you have over 5% moves in the 5 minutes, so you want to watch Powell? Okay. I appreciate that, Hustler Maniac. Thank you for the kind words. I really appreciate that. And you know what? Don't thank me, because thank the people who liked this video. The reason that you're able to find it was probably because some people liked the video and it popped up to you. So that's great. I'm glad to see more people coming in here learning some different things. Like any little thing that you can learn from someone that just makes you just that little bit better. Everyone might need a different thing, right? Managing of risk. You might need a little bit more understanding of just the MACD, of positive territory, negative territory, that kind of thing. Divergences, all those things. Maybe one of those things just really helps you out and changes your strategy completely. Of course, Chris. Yeah, we're going to play Jerome Powell. I have it up on my other screen. I'm just waiting for this. It says 2 minutes left until the stream starts. And Nvidia's up. Nvidia's okay. So Nvidia is going up towards its expected move, its weekly expected move as this begins. So just pay attention, because let me click through and see if anything else is hitting its expected move as it begins. Apple outside of its monthly. Okay, I'm just going to notify you guys of things that you should keep in your brain in case you're trading any of these stocks. Apple right now is above its monthly expected move for the entire month of July, and we're only 9 days in. Tesla is above its monthly expected move in the whole month of July, and we're only 9 days in. Okay, so now this can curl up, positive territory. Make sure you're paying attention to things. Still can go higher. It just tells us to pay attention to our probabilities. Actually, Amazon basing out here. Let's look at Amazon just for a brief moment before this starts. I want you to look at this 30-minute and just tell me that this doesn't look like, hey, oh yeah, it's going to break down. Nope, and then it holds up. If this 30-minute crosses, you break through this level, that can be pretty bullish. We can go all the way up to something around like a 206 or something like that, okay? So we're paying attention to that breaking to the upside. If that curls up and curls right back down, then we'll pay attention to some reversal signal going on there. Nvidia actually going right up towards its weekly expected move right now towards 133. AMD hit its monthly expected move. AMD hit its monthly expected move right on this wick. Right here was the monthly expected move, and that thing came down. Okay, so this thing is starting to see a little bit of resistance. I'm not saying it can't go higher. I'm just saying a 30-minute pullback looks likely. 169.58 looks pretty nice for that. Meta in the middle, right? It's right in the middle. It's not necessarily saying up or down. It just says, hey, if that 30-minute curls up, positive territory is there. Microsoft in the middle as well, saying I am in a 30-minute pullback as of right now. Google saying the same thing, saying I pulled back. Now I'm going to try to head higher, and then fading just a little bit. We'll pay attention to that. I don't have a move for Netflix, but that thing looks like it might turn up on a 30-minute. And then we have AMC and GME. AMC looks like it might want to curl down on the 30-minute for now, up towards that weekly expected move. Awesome. GME looks like it's curling down as well. Okay, so let's go look at GME for a second just to show you guys the 30-minute here. We were talking about the possible divergence that was up here that could lead to this thing overall pulling back. So if this is not going to be the moment, then this might be something to pay attention to. Look at that divergence here, and then you kind of have divergence between this point across, and then you have flatness across. So this could just be some kind of pullback, looking for if that is going to curl back up into positive territory. But if we start to curl over this 2 hour, look where it is. It's negative, okay? So we should not expect a bunch of positivity if we start to turn this 2 hour down, right? It's when that 2 hour turns back up where we could see positivity, but we could see this breaking down. I don't know if that'll necessarily happen. I would pay very close attention, as we do have dailies that look like they want to cross for GME. I'd pay close attention to this 30-minute today. If that's actually going negative, or if that's able to just curl up by the end of the day, that might be a good hint. Same thing for AMC, right? This has not curled over yet, but if it does, see if that's able to just curl back up by the end of the day. I think that daily momentum could take over for AMC pretty much at any moment if any kind of good news is released. All right, let's open this up over here. They're still getting it started, but we will bring this over to the main screen here in a moment. Two seconds here. Now, during this video, I'll keep an eye on AMC, GME, and other stocks on my other screen, but we like to just leave up the SPY. Okay, we like to leave up the SPY on a 15-minute. And what do we notice here? Well, the SPY actually has a point of divergence right now, right before the speech begins. So it doesn't mean like it has to break down, but it does mean, hey, there's weakness in momentum. If this can curl back down, we see that weakness in momentum on the 15-minute. So I think this would be a very good thing to watch right now. All right, and the weakness in momentum, you just see it over here on the RSI, on the MACD at the same time. So we still need this to curl down. That's a key thing. You need that to confirm, but we can pay attention to it as we watch what Jerome Powell is going to be talking about, which I have it up. I'm just waiting for him to get started. And there's a lot of buzzing noises, so I don't want you guys to hear that. My God, there's like 20 camera people taking pictures of Jerome Powell. Maybe that, hey, can these camera people make me a thumbnail? Can they make me a thumbnail? Oh, thank you for saying bless you. Yeah, price is moving up while MACD is moving down, Tony. So that is a significant sign of some kind of short squeeze. So if the indicator is blatantly going down while price is just blatantly going up, it's a sign that you're in a short squeeze. But it's like there's not even that many shorts in the market. Like I don't think there are. I'm just waiting for it to get started, guys, and then we'll get it up there. There are actually. There's more shorts in the market today than I thought. You're at a 1.33 put call ratio. And then for Friday's expiration, you actually have a 3.45 put to call ratio. So a lot of puts actually in the market right now. So you can just keep squeezing. Looks like there's a little bit of a wall at 557, so our daily expected move makes total sense.
Use their power to funnel all the gains in the economy to the top, aided and abetted by too many people in this room. Corporations squeeze every last penny from Americans' pocketbooks and workers' paychecks. They don't even try to hide it anymore. The biggest corporations are charging more for less. Americans are frustrated. No, actually, Americans are pissed off. They have fewer and fewer choices. Those choices cost more and more. Keeping prices down is part of the Fed's mandate, but as many of us have made clear, the Fed's main tool to combat inflation, raising interest rates, does nothing to address the biggest causes of rising prices right now: corporate greed. Keeping rates too high for too long threatens workers' paychecks while keeping other costs high, particularly housing costs. Housing prices and rents continue to go up. It's no surprise that since the Fed began raising rates, the amount of income families need to qualify for a mortgage has nearly doubled. Homeownership has long been a bedrock of our middle class, but today fewer and fewer middle class families can afford to buy a home. Higher interest rates are making our country's housing supply shortage worse, not better.
I'm sorry, hold on. Corporate greed doesn't make sense, by the way. There is corporate greed, but it's government greed to make corporations bigger to make them more money. And then also,
higher interest rates make borrowing more expensive.
It would be government spending is causing the inflation.
Or a car or anything else. Most people don't have the luxury of paying for everything in cash. And for the millions of Americans feeling their budgets stretched by higher prices, taking on credit card debt to pay for groceries and other essentials has become an option of last resort. But as more people struggle to pay down their debts, credit card interest rates are reaching all-time highs. Last month, Director Chopra testified in front of this committee and explicitly stated that credit card issuers are charging higher rates far beyond what they need to cover their costs. Corporate greed rearing its head again. Banks are making record profits at the expense of cash-strapped Americans. Every month that the Fed keeps rates high, Mr. Chair, it costs Americans money by making it more expensive to buy a house and to borrow money. Higher borrowing costs stifle future economic growth, leading to fewer homes being built, leading to businesses making fewer investments in the economy, and eventually, if the Fed doesn't stop, leading to workers losing their jobs. As they set economic policy, I urge the Fed to weigh these trade-offs and remember whose jobs and futures are at stake. It's why I've worked with my colleagues to hold corporations accountable and will continue to do that. For instance, we fought to cap insulin prices for senior citizens. We'll continue to fight to extend this price cap on life-saving drugs for all Americans. And why my colleagues and I on this committee are working, it's why we're working to lower housing costs.
He put you in stagflation. You're pretty much
Fed
in it
also
right now,
continues
but he's
its
not
work
going to admit
to
to
keep the
it.
banking system stable and ensure consumers' money is safe. Last year, the Fed and other bank regulators issued a proposal to update bank capital requirements, strong capital standards, and you've heard in this committee overwhelming support for strong capital standards. They're critical for the economy. It's our way of making sure that if Wall Street bets go poorly, which they often do, investors, executives, and shareholders should pay for it, not taxpayers. The biggest banks have spent obscene amounts of money attacking this Fed proposal. But you, the Fed, don't work for big banks. You work for the American people. Your concern should be developing capital rules that protect Americans' money, not protect bank CEOs' stock portfolios. The Fed needs to look past these shameless lobbying efforts and finalize a rule in the best interest of taxpayers.
Yeah, they ain't doing that.
Another dangerous piece of the Wall Street business model that makes our banking system less safe is incentive-based compensation. This compensation model rewards risky behavior that enriches Wall Street executives in the short term, but makes banks more likely to fail. We saw the results of that model in 2008. We saw it again last year with the failure of Silicon Valley Bank and Signature. Other regulators have moved forward with a proposal to rein in these reckless incentives, but the rule, Mr. Chair, can't move forward without your and the Fed's
Microsoft
moving
crossing
on it.
down on a 2-hour MACD
This
with
rule is
2-hour
long
divergence,
overdue. The
just so
Fed
you're
must
aware.
join this statutorily required effort as soon as possible. The Fed also has the important job of reviewing mergers and acquisitions between and among banks. Over the last several decades, we've seen the largest banks grow into massive, literally trillion-dollar companies, while thousands of small banks in rural communities in Northwest and Southeast Ohio, in small towns in those areas, and all across America have disappeared. Consumers have lost trusted local banks. Small businesses have lost longtime reliable banking partners. Regulators like the Fed have the crucial job of guarding against mergers that reduce or eliminate competition and lead to bank closures or layoffs. I recently
glad
sent
they're talking
comment
about
letters
banks.
to the OCC and the FDIC on their current efforts. I expect the Fed to take the proper steps to ensure that its merger review process is robust and that it protects consumers and communities. Finally, Mr. Chair, you must ensure the Fed has high ethical standards. Fed officials should never again be able to profit from their positions by using confidential plans about Fed monetary policy and emergency programs to pad their investment portfolios. The board's
Lucy's
latest
in the sky.
update to its trading rules is simply not good enough. It still fails to establish the clear penalties needed for Federal Reserve officials who make investments in violation of the public trust. A rule with no consequences is really not much of a rule at all. The American people need to be able to trust that the Federal Reserve works for them in a time of deep cynicism that people have about the federal government overall.
They don't. Get rid of them.
American people need to know that officials aren't abusing their positions for personal gain. As chair, you have an important role to play to make sure our economy works for everyone, not just for Wall Street. The Fed's regional banks must do their part to hear from people and other stakeholders in their 12 districts to understand their needs. I look forward to hearing today how the Fed will balance its dual mandate, how it will protect Americans' money, how it will foster an economy that upholds the dignity of work.
So that's good, but I have some notes. I'm gonna take some notes and we'll talk about it after the video.
Welcome back. Joe Biden broke this economy, and it's been very difficult to fix it. That's the bottom line. I want to start with the end in mind. Joe Biden broke our economy, and it is very difficult for anyone to fix it. Everyday families are struggling to put food on the table. Real wage growth is being eaten away by rising prices and runaway inflation. Think about the fact that for 52 consecutive weeks under Joe Biden, wages were eclipsed by inflation for 52 consecutive paychecks. I remember back in December 2020, in South Carolina, gas was $1.99 per gallon. Today, it's still $3.19 per gallon, a 50% increase in just a few years. So it's devastating to the average American family, particularly families like the one I grew up in, a single-parent household mired in poverty. When you see your gas prices up 50%, Your food up 30%, your cost of keeping your house cool or warm up 25%. It's not a challenge. It's not unfortunate. It's an absolute crisis. And too many households in America today are living paycheck to paycheck, and they fear the challenges that are coming our way, the headwinds brought to us by the Biden administration. Those headwinds, of course, are seen through the prism of inflation. Inflation hasn't been this high since the Jimmy Carter years, and that devastation is being felt and measured in households by too much month at the end of the money. And that devastation is real for the vast majority of Americans. And the pointing finger, I tell you what, whether it's the Biden administration throwing the Fed under the bus or any other way they can deflect from the real problem. I've seen it, committee hearing after committee hearing after committee hearing. My friends on the left want to point their fingers at anyone other than the real culprits at 1600 Pennsylvania Avenue. The progressive wish list, spending projects, and out-of-control regulations of this administration continues to eat away at American paychecks. And they continue to blame, whether it's shrinkflation, greedflation, skimpflation. They're looking for someone to blame except for Bidenflation. The devastation of Joe Biden's economic policy continues to impact everyday Americans. The American people see through the facades and they want real solutions. It doesn't take a PhD economist to understand what the average American is experiencing under this administration. When President Biden and my Democratic colleagues pump trillions of dollars into our economy, those dollars increase the demand and pushes prices higher. It's that simple. The American people see and feel it every single time. And they see it, as I said earlier, the grocery stores, the gas stations, at the doctor's office. It's just undeniable the impact that this is happening. Just last week, we celebrated the birth of our country, the birth of this notion of freedom and liberty. But American families got slapped with the most expensive July 4th on record, with a cookout this year costing, on average, 30% more than it did just a few years ago. I call that hogwash. What's worse is that this administration doesn't want to learn a lesson in economics. Instead of reducing the push for more spending and more regulation, they only simply double down. Let's take, for example, the tens of billions of dollars of student loan forgiveness. Constant new plans to forgive more money, regardless of the constitutionality of their decisions. So it's important to ask, who are these billions of dollars of forgiveness actually benefiting? Well, the answer is simple. This forgiveness scheme will result in debt relief for 750,000 individuals from households with an average income of $300,000 or more. And just don't forget the fact that the average American family has a household income around $74,000. So what we're doing with this unconstitutional student loan forgiveness is actually asking the median household of $74,000 per household to bear the burden of forgiving debt for students who live in households of over $300,000. And the actual cost of this, somewhere between $870 billion and $1.4 trillion. So why do I have to even ask the question? Why do we continue to punish American families struggling paycheck to paycheck with a new scheme to relieve households over $300,000 of student loan debt? Well, the answer is pretty simple. Politics. It's one way to buy vote after vote after vote for November's election. It's just hard to imagine. So while I appreciate your measured words outlining the Fed's work to cool inflation, I think it's past time we all recognize what is truly going on. Political pandering from the left. I strongly believe that our economy cannot handle any more of this wasteful spending. And if you disagree, I would love to hear. But it's not just spending policies that stifle growth, it's also overregulation. And I can't think of a better example of overregulation than parking more capital on the sidelines through Basel III Endgame. That proposal itself would cost millions of Americans their chance to own a home, start a small business, and have access to the credit and the capital necessary to make their American dreams come true. For those who are actually watching this hearing today on C-SPAN, Basel III capital requirements are like taking your star quarterback, Dak Prescott, and telling him to sit on the sidelines because he just might get injured during the season. It's just plain ridiculous. But these proposed capital requirements would just do that, forcing more money to the sidelines of the greatest economy on the planet and out of the hands of first-time home buyers, business owners, and folks trying to achieve the American dream.
Loses this point.
The stakes are high, and that is why we have to get this right. You've heard me say this a number of times, but it bears repeating. We need transparency in your rulemaking process,
Ashish, thank you for
as this
subscribing.
normal proposal lacks any form of clear justification. Chairman Powell, it is essential that you and your fellow governors and the other agencies join in this rulemaking, follow the law, do the homework, and then let the public check the work. And that's why I believe that it is absolutely necessary to have a complete re-proposal of Basel III Endgame. Give the stakeholders an opportunity to take a look at it and then recalibrate what is necessary going forward. Any increases in capital that are not quantitatively justified harm the American people who need it most. Our farmers, home buyers, small business owners need and deserve access to credit. Therefore, I'll repeat it one more time. You need to restore confidence in this rulemaking process, pull the existing proposal, and have a complete restart. And then, when the data has been analyzed and is available for the public scrutiny, reissue an appropriate proposed
that's
rule
how it is,
following
Tony.
the requirements of the APP.
We gotta wait till there's
APA.
actual questions
I look
for
forward to your opening statement and having a chance to have the conversation afterwards.
Thanks, Senator Scott. Mr. Chair, welcome. Thank you for your service and for your testimony today. Please proceed.
All right, here we go.
Chairman Brown, Ranking Member Scott, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2%
Towards making
inflation
the
goal,
rich richer.
and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance.
We need more data.
I will review the current
Definitely gonna be
economic
said.
situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace.
With 4 companies.
Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators
if I get bored, I'm
suggest that
turning this
conditions
off.
have
We have more fun
returned
if we
to
look at
about where they
stocks, you know?
stood on the eve of the pandemic. Strong, but not overheated. The
Not
unemployment
overheated.
rate has moved higher, but was still low. Was still at a low level of 4.1% in June. Payroll gains averaged 222,000 per month in the first half of the year. Strong
think
job
you're living
creation
in a
over the
movie right
past
now.
couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25
Facts,
to 54, so-called workers in their prime working years, and a strong pace of immigration. As a result, the jobs to workers gap is
illegal
well
immigration.
down from its
It's a
peak
little
and
different.
now stands just a bit above its 2019 pre-pandemic level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.6% over the 12 months ending in May.
Watch that
PCE
30-minute
prices,
curls
which
up.
exclude the volatile food and energy
Pretty sure you
categories,
still have upside
also
here.
increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent
curls
monthly
up
readings have
positivity.
shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. A restrictive monetary policy stance is helping to bring demand and supply conditions into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Federal Reserve with operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored.
It's always the same.
Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans.
That's a red bar.
I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country.
Oh,
Everything
it is. Yeah. You look up real inflation.
Thank you.
Whenever they can make data better, they delete something else out of the data so that it looks better.
In the questioning, Senator Reid.
Thank you very much, Mr. Chairman. Former President Trump has indicated that he would propose, if elected, a substantial increase in tariffs of between 10 and 60%, and by doing thus, eliminate the federal income tax. First, on the question of what would be the impact of tariff increases on prices, consumers, and the economy?
Thank you, Senator Reid. So I'm going to say that we go very far out of our way not to comment on campaign-type information. We just don't do that. We also don't comment on trade policy. We have really specific and important jobs, and we try to stick to those.
Well, I'm glad I allowed you to establish that principle up front, Mr. Chairman. But let me opine a bit. 10% increases in tariffs is going to have an effect on prices in the shop aisle. It's going to increase them because they'll be passed on likely. 60% tariff increases are significant. And in fact, I've been told that to replace the income tax, we would have to raise tariffs across the board 70% to make up for the loss of the income tax, which would, I think, create huge economic problems. I respect your impartiality and your neutrality, but The numbers don't seem to add up to anything that would help the country. Let
No,
me switch to
he's-
something else that might be.
He's taking
more within
American
your,
production out of the
line
equation.
response. You said in your opening statement that labor markets appear to be in a better balance. And that's one of the key factors to judge whether
yeah,
interest
coffee is
rates can be
insane.
raised. I'm
Exactly,
concerned a bit that
Bubblicious.
we're not on a very faster track to decreasing interest rates from the Fed, and because of the better balance you cite. Could you comment on that, Mr. Chairman?
Sure. So the most recent labor market data do send, to your point, a pretty clear signal that labor market conditions have cooled considerably compared to where they were 2 years ago. This is no longer an overheated economy. This is an economy, as I mentioned in my opening remarks, that is more or less back by most measures to where it was before the pandemic. And that was a strong labor market, but it was not an overheated labor market. So I think the upshot of that really is that we're well aware that we now face two-sided risks and have for some time. But now, the labor market appears to be fully back in balance. We know that if we move too quickly, we risk unnecessarily hampering economic activity and possibly interfering with the ongoing expansion. We know that if we move too slowly, that we may undo the good we've done. Well, actually, it's the other way. If we loosen policy too late or too little, we could hurt economic activity. If we loosen policy too much or too soon, then we could undermine the progress on inflation. So we're very much balancing those two risks, and that's really the essence of what we're thinking about these days.
But the direction seems to be going towards lowering interest rates at some
I'm
point. Might be a
bored.
wish.
It's
rather
live,
than a
but
direction.
But I think if you look at the last summary of economic projections,
I'm
I
just
guess I
gonna
would
be
say it
real.
this way.
I think he talks like a little puss.
It doesn't
puss
seem
all
likely
day,
that the next
so
policy
I'm
move would
slightly
be a
thinking
rate
about just,
increase.
like,
We
looking
don't
at
take things like
stocks.
that off the table, but that does not seem the likely direction. The likely direction does seem to be in.
I'd rather click around
as
and
we
look
make
at
more
stock. Like, I
progress
think
in
it's more
inflation
fun
and
that
as the labor
way. I
market
have a
remains
couple of
strong,
notes
we
that I
begin
could
to
talk
loosen
about based on
policy
what
at
we've
the right
seen,
moment.
but
Thank you. Just 2 weeks ago, the Supreme Court handed down 2 decisions that impact every federal.
yeah, so this is going to turn into a political game. So I'm saying part of me is like, this is just dull. Maybe we should pay attention to the signals during. I want to hear what you guys think. If you really want to watch it, we'll watch it. But it's just so dry every time. You know what I mean? So it's up to you guys.
Under the Administrative Procedure Act. What is your judgment is the cumulative effect of these decisions on the
We'll
Federal
watch it
Reserve?
for a little longer.
More broadly, what does it mean to the economy if virtually any regulatory
We'll watch a little longer. A little longer?
what position are we in now?
So we're as an institution very focused on reading the actual letter and intent of the law and following it carefully. This is a strong institutional value that we have. Those are brand new decisions that just came down, and we're really in the process of just studying some. I don't have anything for you on them, but we will, of course, follow the law as the Supreme Court as the Supreme Court has read it, because that's their job.
Well, thank you, and I concur with compliance with the law, but when you do your analysis, and if it is detrimental to your ability to regulate the banking industry in the United States, I think you have an obligation to make that public. Thank you, Mr. Chairman.
Thank you, Senator.
I'm looking
Senator
at stocks
Scott
on my
from
other
South
screen.
Carolina.
AMC it's
Mr.
trying to
Chairman.
curl over on the 30-minute
Powell,
right now.
We've heard
and curl
a steady
down.
stream of
We'll see,
commentary
that's a
that
green
there will
bar
be
for
changes to Basel III endgame proposal. That can be seen certainly as good news. Some reports say it could be finalized as soon as August. Others say you are circulating a term sheet for a revised proposal. Through it all, this proposal will have outsized impacts on our banking system, from big to regional to our U.S.-based foreign institutions, as well as impeding access to credit for consumers. So even though you yourself have said there will be broad and material changes, I believe this proposal is flawed, both in process and in substance, and should be withdrawn. Do you agree, and will you commit to withdrawing the existing proposal and issuing a new proposal with a robust notice and comment process?
Well, let me update everyone on the
Please.
status of all that. So Over the past several months, we've had, in fact, Vice Chair for Supervision Barr has held a series of discussions with the other bank regulatory agencies around potential changes to the original proposal. I'm pleased to say that we've made quite a bit of progress on those and are very close to agreeing on the substance of those changes. And I can't really be specific because nothing is agreed until everything's agreed, so I won't have a lot of specifics for you today. The question where we're continuing to try to make progress is that of process. So it is my view, it is the strongly held view of members of the board that we do need to put a revised proposal out for comment for some period. And the reason is, when there
Got
are
an egg
broad
sandwich with Japanese
changes,
mayo.
that has
Just
been our
saying.
practice. We don't see a reason to deviate from that practice. It seems to be consistent with past practice and with the Administrative Procedure Act. So that's very much what we think. And we're working through that question with the FDIC and the OCC. We haven't reached agreement on that, but I'm very hopeful that we will. We're prepared to move forward when we do reach agreement on that.
Well, I appreciate most of your response there. I do want to discuss one aspect more of Basel before we move on to another topic. I find it very
She
concerning
made
with
homemade
how much of this
Kewpie mayo.
proposal, this process appears to have been done behind closed doors. The Fed, the FDIC, OCC proposed the Basel III endgame last July. Then in October, the Fed began the collection of data to conduct a quantitative impact study on the cost of Basel III proposal, a study which I will note should have been conducted before any proposal was ever issued. Move forward to January of this year, Vice Chair Barr committed to a public comment period once results of the study were published. We are still waiting to view the results. Keep in mind, all the while, we're hearing rumors that the Fed is working on revising its proposal and moving towards an updated version. Please help me understand, how will the Fed revise or reissue a capital proposal before receiving public comments? Basically my question.
Well, as you know, we have received extensive public comments, and we've also evaluated the quantitative impact survey that you mentioned.
Yes.
And so the idea would be when we do reach agreement with the other agencies fully, that we would publish the proposed changes and also the quantitative impact survey, and also the effects that the QIS suggests that the changes would have. So we'll put all that out for comment again for a period of time, and then having had yet another round of comment, and we can then move toward finalizing. That's basically the broad strokes of how I would see this moving forward.
And how long do you see that opportunity for public comments?
So it would be meaningful. I mean, it might be 60 days. We don't need to it doesn't need to be a long one. But, before we do that, there's a lot of work that needs to take place, before you actually put out the revised proposal. Quite a bit of work. So it will take some time, and then we would put it out, and then there would be, I'm just taking that number, 60 days of comment, and then we would get the comments back, and there would be another period of evaluating the comments, and only then would you go final. So there are a number of steps here.
Yeah, thank you. Well, just final point as I'm running out of time here. I think Senator Reid made the comment about the Chevron case and the impact that it could have, certainly in curtailing, from my perspective, the regulatory state. The necessity of a cost-benefit analysis on new regulations that will impact the economy, I think, is quite helpful. In the thousand-plus pages of Basel III, I think there were about 20 pages that reflected some kind of cost-benefit analysis approach. I really hope that we see more of that going forward.
Thank you.
Senator Tester from Montana is recognized.
Well, thank you, Mr. Chairman. Thank you for the courtesy. Chairman Powell, good to see you here today. Appreciate your work. Look, regardless of where I go in the state of Montana, housing is a big issue, whether it's Billings or Butte or Bozeman or Busby or Big Sandy, it doesn't matter. Larger towns to medium-sized towns to small towns, housing is a huge issue. And I think it's a huge issue all over the country, and correct me if I'm not correct in that. And I was wondering how the housing challenges fit into the overall economic picture that you're seeing.
So we We do pay a lot of attention, and I would agree with you. We have significant housing issues in the country, and we had them before the pandemic. Certainly, the pandemic has created new distortions, and you know, monetary policy works through interest-sensitive
it wasn't
spending.
even
There is
the
no more
pandemic.
interest-sensitive spending than
Did someone
buying
tell
a house
this
and having
guy?
a mortgage. So, for
They
sure,
printed
our tighter
fake
policy is having an effect
money.
on economic activity in the housing sector. But I would also say the best thing we can do for housing is to succeed in getting inflation down to 2% on a sustainable basis so that rates can come down so that the housing market can get back to what was the pre-pandemic normal, which is to say still a housing shortage, but not dealing with the kinds of specific things we're dealing with now.
So let me drill down a little bit. I'm speaking not necessarily from a housing cost interest, and you're correct on the things you just brought up. I'm speaking more from a standpoint of economic growth, in that there are plenty of small businesses, schools, hospitals, Main Street businesses that can't hire people, they can't expand because there simply is no place for them to live. How does that fit into your economic outlook metrics? Because I think it's, from my perspective at least, I think it's limiting the opportunity for expansion. It's limiting the opportunity for entrepreneurs, business startups. And does that fit into the economic picture that you look at?
So our mandate is for stable prices and maximum employment. And again, I think for housing supply, the best thing we can do is get inflation under control so that rates can come back down, so that we can have a more normalized set of rates and a more normalized housing system. But I think policies to increase housing supply are really not so much in the hands of the Fed, they're in the hands of legislatures, state and federal.
Do you believe that if we were to put forth some housing incentives, whatever they may be, that could have if those incentives resulted in more affordable workforce housing on the market, that would have positive impacts on the economy?
These are questions for you, but I would say this, that I'm aware that housing is in short supply, and that for many it's a critical need for the workforce.
Okay.
And so more of it is better. But as to where the fiscal policy how you should prioritize that, that's not up to us.
Look, I want to talk about the independence of the Fed for a second, because I know that
look at
you
Nvidia
are
on
a
this
strong
screen.
Supporter of independence, as am I. And
AMC turning back up on the
political
30 minute.
influence,
That's good.
I don't think helps with monetary policy in the country. And so give me your perspective, at least, on why the central bank independence is so critically important.
Thank you. I'd be glad to. So essentially all advanced economies have adopted a policy of central bank and operational independence, and that just means that we make our decisions, we're instructed to make them without taking in extraneous factors.
Nvidia has the
one of which would be
divergences
politics.
here,
And, the
and
record
you're
is
at a
pretty
weekly
clear that
expected
that's-
move, so
that
a
that's
30-minute pull down
a good
is
it's
likely
a good
here.
institutional arrangement,
Or
that
it's going to
serves the
break
public
through,
well.
and we're going to see something
And,
crazy. That's all. There's not a lot of reversal.
We just want to
here.
stress, as we do periodically, that this is an institutional choice that we make as a country, and that as long as it's seen to serve the public well, it's a good choice. We think so.
Okay, on advanced economies.
This is an institutional choice, which could be good for Americans. No, it's good for institutions, you dip.
The economy of this country is doing compared to other advanced economies that have central banks?
So I'm in lots and lots of international discussions as part of my job, and the story for the last 2 years has been just how exceptional the performance of the U.S. economy has been, and that's not a secret. Clearly the U.S. economy has performed very well compared to sort of our advanced economy colleagues.
Is there any country in the world with a central bank, any advanced economy that's performing better?
Better as a central bank?
Any economy that's an advanced economy that has a central bank that performs better than us?
None comes to mind. As I think of the majors, the answer would be no.
Okay, thank you.
Yeah, because they're just not printing as much money as us.
South Dakota is recognized.
Thank you, Mr. Chairman. Mr. Chairman, first of all, thanks for coming in again and visiting with us. I just want to focus on two specific items, and I'm going to start with the Basel III endgame discussion. I think Senator Scott did an excellent job of kind of laying out the concerns that many of us have had with it. I would like to go back into just one particular issue, which I think a lot of folks out there that follow this, and I know it's technical in nature, but let me just ask a specific question, and you can kind of pick it apart for me, please. Both you and Vice Chair Barr have confirmed that there will be material changes to every risk type outlined in the proposal. Since there will be significant changes, do you believe where the agencies have landed now would be considered a logical outgrowth of the original proposal from last summer?
For those people who are not familiar with, that's the legal test for that turns out to be if it's a logical outgrowth. If it's not a logical outgrowth, that would legally require a reproposal. And I don't want to make the legal judgment. I will just say again, from my standpoint, my view and strongly held view of some of my colleagues on the board is that it will be appropriate for us to put out the changes again for a period of comment, just because it's the right thing to do. It's what we would do typically in a situation where there are, material changes to a proposal.
Do you feel that you have a consensus in the board to allow that to move forward in terms of an additional comment period?
Yes, but of course we have to get the FDIC and the OCC. We're in discussions with them to work on something that would meet that need, and we have to get their agreement too.
Assuming it sounds like that's the path that you would like to go down.
Yes.
If that were the case, would it be fair to say that we'd probably be looking at final determinations or recommendations for a Basel III endgame proposal probably into next year before it would become anything of a final determination?
I think that may be right. It's that something like that could be right. Yeah. I mean, it's you can't. It's hard to be precise. We would put it out. It takes some time to write this stuff up. Then you put it out for comment. Then you get the comments. Then you read the comments. Then you write the final rule. Beginning part of next year is a good guesstimate.
The only reason why I push is because there are so many folks directly involved with this and the impact on our economy here and with a lot of our financial institutions. This is a significant change, and it's one that a lot of people are following. So I'm trying to get you to get into the depth of this as much as possible, and I thank you for that. I'd also want to go into one other area, and once again, this is something that you and I have had visits about in front of this group before, but I want to talk about what the parts of inflation are and what parts you can control and what parts, as the Fed, you really can't control. The demand side of the equation on inflation is the part that you have the tools to work with. But there is the supply side of the equation, which is still out there. And I want to just lay this out because as we do this in this setting, it naturally becomes political in nature because one of the starting points that we talk about is when this administration took office and what happens with supply side issues at that time. And as I work my way through this, I just want to share the concern that I've got. And then I recognize you don't want to be political in it, but I want to lay this out. And then I want to talk about what you can control and what you can't control with regard to making changes on inflation through the processes that you have. When President Biden took office, gasoline prices, since President Biden took office, gasoline prices have risen over 54%.
Oh, I'm so close.
Energy prices
I just
have
want to look
risen
at stocks,
41%.
guys.
Fuel oil prices have risen 37%.
We know they've risen.
Now,
He's going to
I can go on and on,
explain
but you
how
understand what I'm
it's not
saying
that
is
bad
energy
and
has
it's
increased
coming down
substantially.
and blah, blah,
And I
blah.
think one of the reasons for this has been additional demand as we've come out of a pandemic. But the other part of this has been
Yeah,
whether or
fuck
not
this. Let's watch
investment-
stocks. I can't do it. I can't do it. I mean, I have notes over here. I just can't. I can't do it, especially when they talk about housing, because they're like, it's unheard of. We need to build more houses. No, if you have a bunch of houses and you allow an investor to come in and get one, that's fine. But the fact that now his stock portfolio looks like this, and therefore the banks want to give him more loans, and it's easy still for him to get loans because his stock portfolio is artificially higher. Now he can buy up more of those homes and turn them into rentals and charge whatever price he wants in the market. That's the whole freaking point. That's just one example. Think about Airbnbs. Think about anything like that. There are probably plenty of houses that are just sitting vacant and not being rented right now because these people own them. So housing really bugs me because they act like it's this complicated thing. It's like, no, you just sent out free money, made loans very easy to get in 2020, 2021, and then we saw how people started to invest in homes in other states. That wasn't even someone from the same city. I have people from California in my city right now buying up 10 houses, bulk amounts of houses. There's people buying up 5 to 10 houses a piece, and they're all investors from California. That's what it is. It's that you're seeing investors slowly ruin the market because they're getting too much valuation on stuff. Therefore, the bank gives them a full amount of that money. If they have, down here they had $500,000 worth of stocks. Well, now they have $1 million worth of stocks. They can get $1 million loan and go buy 4 houses. That's the whole point. It's not good. That's really annoying when they talk about housing and they keep saying, oh, we need to build more homes. No, you need to stop giving free money out and stop giving these free loans out all the time from the banks who don't even have the money to back it. They're already trillions of dollars underwater, or I think it was like 500 billion or something the last time I checked. It's like, if they're underwater, then that doesn't make sense. So let's go over to stocks real quick. Looking at the SPY. So what happened in the overall minutes he was talking, the points I have up here, overall, the point about corporate greed, I go, he's kind of right. The guy who brought up corporate greed, he's kind of right, but technically it's government greed, letting corporations go higher and higher, which leaks into other communities. So once you let these corporations, whatever, rich people in general, start to get more and more valuations of their portfolios, of the increase in their wallet, then they're able to get loans and buy up a lot of the products in the housing market. And that causes inflation in the housing market. Like, this is not too difficult to understand. And now they're sitting on those homes, and then the people who just own the homes and bought them as Americans are going to sit on the homes because they have a good rate and the valuation of their home is higher. So they're going to sit on the home. Why would they sell it until we see unemployment go up? Once you see unemployment go up, they're going to have to sell their homes. And we're starting to see that slowly more so leak into the Airbnb community. Airbnb, we're having a little bit less travel, I hear, down towards Florida and other places, and that is causing people to have to try to sell their Airbnbs quickly, but they're not willing to reduce the price. Okay, so it's technically government greed because the government is spending, though. They are the ones spending. So inflation is made by the government spending and making more government jobs. And then they say the jobs are good, but those jobs don't produce anything. They just take more tax dollars. When they just say, hey, suck it up, taxpayers, because we're making new jobs and you're going to have to pay for those jobs. They don't pay for themselves. They don't produce anything. They just take from the American citizen. It's technically the government who allows the banks to create these loans for the corporations, right? Through COVID, we had a bunch of loans coming out for corporations, PPP loans that were supposed to be stopped in Trump's presidency. They were supposed to be stopped in 2020. I believe it was 2021. They were supposed to be stopped right as Biden came into office. They were supposed to go out. You weren't supposed to be able to get those loans anymore. Biden cut that out of the picture, and that is why the Biden inflation is kind of a real thing, because he took that out. He stopped it and he said, no, we're going to allow people to keep getting these loans. That causes more and more inflation. Then he gives money to Ukraine. Now we give money to Israel. We're giving money everywhere that we don't even have. And all of it lies on the backs of the American taxpayer. So and also these loans, it's important to note, they're backed by nothing. What are they backed by? The gold standard, nothing. They're backed by nothing. So you're printing inflation out of thin air. And then also when he said, we're not in an overheated economy. We're not in an overheated economy. I think this is important to break down. We are in an overheated economy. We're just coming into an overheated economy that's about to be burnt out. That is because the amount of money they used to fake print back in the day used to make the GDP look insane. They used to make the GDP look insane, right? It used to be going up by 3% and things like that. But now I want you to think about it. Now that same amount of money that they're still putting in, even more amounts of money that they're putting in now into the economy, is not printing that in the GDP, which means, and we've looked at this before, where we looked at the GDP print, and it said they made, I think it was like 300 billion or something like that in a quarter, something like that in a quarter or something. And they had to print during that time 800 billion worth of dollars. So they had to print 800 billion to then make 300 billion. That is a losing structure. If you have a business that is that and you're starting out and your numbers look like that, maybe not in the billions, maybe it's only in the thousands. If your structure looks like that, you're going to be struggling really, really hard. You're literally only alive because of debt. And that is how we are right now. The GDP is only higher because of debt. And it's slowing down because now we're having to print more and more and more money in order to keep that GDP going up. It's like we're printing more money now and the GDP is less. That is something to worry about. Not we're not overheating. It's we're getting burnt out. You can see that. So it pretty much like the main thing here is we're going to have to print more and more money. It's literally just inflation in the debt. If you think about it, the inflation that is hitting the market is also the inflation in the debt. The debt itself has to inflate in order to keep getting those numbers in GDP. The fact that GDP is kind of coming down a little bit, he's saying that's a sign of it not overheating. That's actually a sign of it getting burnt out because you're still printing those large amounts of money. You're printing larger amounts of money. That's it. There's my rant. All right, there's my rant based on what we listened to. And that's what I think you really need to pay attention to. You need to actually like know what is like, it's more so, I'm not like doing a bunch of research and doing like, I'm really not when I think about these things. I'm just thinking very common sense. If we're still printing a lot of money and we're not getting as high of a GDP anymore, that means we probably need to print more money to see a higher GDP. And that is a scary, scary recipe. It really is. As of right now for the SPY though, let's get into some technical analysis here. As the SPY reaches up towards that daily expected move, we see the 15-minute divergence. Now this is just a 15-minute divergence. It's just close to going negative. That's why I wanted to watch it. We're just seeing kind of it go down, go up, go down. We'll see what happens with that going forward. I just can't listen to that dry talk anymore. As of right now for the Qs running into that little zone right here, right above that monthly expected move. So if that curls over, watch out. And we'll pay attention to these things. But for now, we have to say this is a very bullish market, okay? So we have to pay attention to upside. Now 15-minute for Aapl here, seeing a little 15-minute divergence kind of far away from the center line. You see the 30-minute, how this would more so be, you know, you're squeezing for Aapl right now because this is just pointing down and down and down, not even curling back up, and we're going up and up and up. So that is a sign of some kind of short squeeze, just so we're clear. And pretty much it's just right when retail says, yes, I'm going to go in, I give up, that is when this thing will start to pull back to the center line, curl up at any time. So once we actually see that fall down, curl back up, that would be a time where we could see the next swing higher, okay? And someone's saying about drilling, like that is overall the other thing that they pointed out during it was tariffs. Tariffs are so that we stop making other countries more productive than we are. What he did not add to that is Trump wants to make productivity in the United States. So I don't know if he was trying to take a jab at him by leaving out half of the info, but if you make productivity here and then sell those and you put tariffs on imports, it will cause less production in other countries and you will stimulate your own economy yourself, which is kind of a cool way to think about it. But we'll see what happens with Aapl from here. Tesla, this one here trying to curl up. So if this one, it did pull down. You saw it was going up while this was going down. Well, that did pull down. So if this can confirm up again, that might be another big move. We'll pay attention to it. As of right now, though, you have a bunch of divergences across the way. So Tesla, pretty much it would make sense to see a pullback, but we'll see what happens from here on out. As we go into Amazon, this one here just curled up on the 30-minute. This is one I was watching on my other screen. You really want to pay attention if you start to confirm, retest above these levels because you can head higher. You're not cooked on the RSI. You have a bunch of divergences across this, but you need to look at the other side of the coin. You're above the 50. You're above the center line on the RSI. You're crossed up on the MACD. This could be a moment to see another higher move. You need to spread it out for yourself hourly there as well. So paying attention to a lot here. 2 hour curls up. You know, you can look at all these right now. I think we'll experience weakness, but just because I think it doesn't mean I'm taking a trade. I'm still looking if that's going to break through for Amazon. Nvidia, this one getting all the wicks up at that weekly expected move. There you go. Weekly expected move is there. So if you're really watching this, 30 minutes probably the one to see if this is able to confirm down and go negative. That would be a big deal for Nvidia, hitting the weekly expected move on a Tuesday, that Tuesday morning, hitting that weekly expected move. It still doesn't mean that we can't see something crazy, but 68% of the time we're going to land in this zone. Okay, so by Friday in that zone, that would make more sense. Real quick for AMD, this one was experiencing more weakness during that. You see the divergences up here, but look how wonky they are. This isn't the most clear, and you could just pull back to that center line, curl back up. So we could see some kind of pull down, or we could just curl up right now. We don't necessarily have to keep pulling back. Things are just squeezing and squeezing, and that's okay. But for now, I think this would be a good scenario for a trade setup. This is something that I'm looking at for AMD. As far as we look at Meta, this thing has not curled up on the 30-minute yet, but look how curvy it looks. It looks kind of better than other things. If that was able to curl up, give me that nice curl. Give me that nice curl up, and then we see that start to fade down. We'll look for a divergence in the near price action, but right now, it looks like for now, we could see this cross up into positive territory. We'll see what happens, because if that crosses up, you can test the high, maybe even go make a new one, paying attention to our weekly expected move. Microsoft, curling down, okay, curling down here by the center line. So the first thing we have to say is pay attention if that reverses back at any time, because this would be a nice curvy look, right? So I like the more curvy, good, solid looks. Now the bad thing about Microsoft, if you couldn't hear me during the Jay Powell thing, this here is divergence on the 2 hour, and it was completing. It started to complete about here, started to confirm about this area. That's why I just kind of mentioned it through the mic on during the speech there. But why you want to pay attention to these is because when you see a 2 hour divergence, that could mean we're going to get a daily pullback. So we could be seeing soon a daily pullback to maybe the 20. It would be the most likely scenario. You notice a lot of the time when you look at a lot of stocks, they like to curl down to the 20 when they're up in these areas. They'll curl down to the 20 and then curl right back up, and then maybe we see a divergence. But if we're going to see something a little more dramatic, hey, that would make sense too. Go test that 50, then maybe head up over time, see what happens with earnings. 50-50 flip. We got to be careful around then. We're coming into that time, so we're going to have to start to talk about earnings soon. Google, this one here, you do see a daily divergence. You see that forming right now. If that's able to confirm down soon, that would not be a good sign. But let's see if that's getting a signal that it's going to confirm down. Not necessarily yet. Not necessarily yet. So if that wanted to, we could curl down to that center line, curl back up one more time, and then maybe that's more the moment in this area, okay, for that. Now, as we go forward, Netflix seeing an upward move, and this one rejected on that 2 hour crossing. Big deal, because that had divergence. So now we want to see, is there going to be a 30-minute pop-up here? Looks like for Netflix, we might be seeing one more 30-minute pop-up, and we'll see if there's divergence up here. Like, you're getting divergences everywhere. It's kind of like another one of those days. You know, it seems like once every maybe 2 weeks, we have one or two of those days where we're like, it's a time to be very, very cautious. And I think this is one of those. So I think you're going through one or two of those days. So join the Patreon down in the link in the description, because we're going to put out a video later today talking about the ranges and if there's any setups. Now, as you look at AMC, this thing is curling down on a 30-minute. So that tells me, hey, this is most likely not going to be the moment, because this is saying 30-minute pullback. The only thing with this that you have to take into consideration is, as long as this daily remains curled up, you do have positive daily momentum pointing up. So you really want to pay attention to this 30-minute today. See if that thing is able to turn back up at any time. That could be a good sign. As far as GameStop goes, that thing is saying divergence turning down. So you have to see if this 2 hours is confirming down. If this 2 hour confirms down today, you might see it go a little bit lower and then create another point of divergence. That would be the positive scenario for a downturn, but you have to be aware of that. As of right now, looking for a 30 minutes, seeing if that's able to curl back up by the end of the day, because you are very, very close to curling up for the daily, okay? You're kind of close there. You're by the center line, so this is a moment to really pay attention. Thoughts on Bitcoin real quick. We can go look at Bitcoin. What I was mainly looking at was the 4 hour here with the higher low. So the 4 hour created a higher low with this little turn down, little turn back up. So that's telling me, hey, it's going to try to go positive. If it needs to make a more sturdy base, yeah, we'll come down to this area. Maybe we touch in our zone. Okay, so 4 hour crossing down, and then the daily scale turning up will be a big deal. You'll probably see a reaction. Maybe we even react all the way up towards to catch up to that 50. And then we have to see what happens from there, because this isn't the strongest base. You do have an RSI divergence down here, so there is a chance that this bounces like pretty heavily, because you have that RSI divergence, but you don't have both at the same time. So you don't have both at the same time, which tells me this could be some kind of rip that then just fades, and then maybe I'd pay more attention to it if it looked like this, right? If it looked more so like an elongated divergence there that goes into a buy zone. Oh, sorry, hiccuped. I think that would be a better look for Bitcoin. I do think it has a chance to run here, but We'll see what happens. Now, someone was saying Palantir. Palantir looking like it needs to do that daily pullback, and it would be great to just pull back to the trend here. It really would. And what do we need to notice about Palantir as far as it goes? Is it going to get that 2-hour divergence that really turns us down? Well, you have it right now, and you're starting to turn down. So this right here is a sign that if this crosses over, you could see a little bit of a negative trend. See if that turns back up, because that daily might need to see a longer pullback over time. We'll see how this plays out, but right now you're seeing a 2-hour divergence on Palantir. Do we have a 30-minute divergence behind this? Not necessarily the best one, right? But we're curling down towards that center line. So I think the most likely scenario here is this is a pullback. It leads into one more pop, and then that 2-hour crosses down, and then that daily crosses down, and then we see if that daily can turn back up over time. That's what I think for Palantir. Hopefully you guys like that breakdown. That was pretty good. I feel like we went through that pretty quick. Yeah, I think Amazon's going to struggle at this level over and over again, and I'm more so leaning towards it pulling back from here, and that's just because of how things are. I mean, how things are looking in the overall market looks like a lot of things are going to pull back. So we'll see if it's able to see some kind of pullback before that earnings. I think this would be nice to just see some kind of pullback on the daily scale before earnings comes out. You only have a couple weeks until that happens, so it'd be nice to get that to pull down dramatically, and then we get great earnings and that thing turns right back up. I think that would be kind of likely for Amazon, but it doesn't mean that I'm trading based on that. I'm trading based on the signals. I need to see this 30-minute curl back down on this MACD. Look how close it is to negative territory. Look how close that is. So this is telling you if I curl down, if I lose this low, probably if I lose this low too, if I start to close below this one, it really would signify like, hey, this is a low, we beat this one, low, maybe we bounce up for a second, lower high, and then we get a lower low down here. That would be more so what I'm looking for from Amazon going forward. AMC is just simple. I mean, the 30-minute cross down, so now you need that thing to cross back up. That's it. You have daily momentum with you. So as long as daily momentum's with you, you just want to see 30 minutes crossing up. Oh my goodness. Oh my goodness. Okay, we did it. We did it. We did a big breakdown right there. It really is, Bruce. It really is. And that's why I'm kind of saying I'd like to see us pull back before at least we get some of these earnings. But maybe earnings might not be the best thing. You know, we've seen some earnings kind of throw us for a loop. Path was an example. We'll see. But earnings 50-50 flip. I gotta sneeze again. I know it's coming. Oh my goodness, there it is. Oh, and Janet Yellen's testifying before the House right now. Interesting. So you have Chair Powell and Yellen both at the same time. Interesting. I'm listening to some tunes. Disney's dead? I don't know that it is fully, because you see these 30-minute divergences. You probably have a 2-hour behind it. Sorry, that's an hourly. Probably have the 2-hour. The 2-hour might form one, but you do have an hourly divergence here that I think you could read into. See if that gains positivity. The reason I'm saying that is just because the daily scale here does have divergence, so you want to look for reversal signs actually at these levels. So if that daily turns up, you could see a positive move. There you go, DJT. Oh, it uncrossed. A lot of the time you need a 30-minute divergence to cross. Here you go. You make a 30-minute divergence here, that would be a good sign. So DJT, I'm looking for the 30-minute divergence now. Looking for if that is created and confirmed. That would be awesome because you have the 2-hour that's kind of giving you the higher low. And then at the same time, you could see that big upward move if this daily is going to start to turn back up. So the daily could turn back up. You do have to, it's kind of a higher low stating here on the daily as well. Ooh. What is... Crush a bit, little bit, roll it up, take a hit, feeling like 2 a.m. summer night. That's divergence, but as of right now, you're still creating the divergence. Okay, so right now you're seeing that curl up on the MACD, so you're still creating it, but that is a sign that I'm not taking any upside play here for sure. 2-hour curls back down, you have that another point of divergence across the way, so I'm a little bit worried about this guy here. Now you do have the opportunity to like curl down, curl back up, boom, and then see that. Kind of really confirm that daily divergence, but this would be a sign of weakness here if that curls down. No, it's fine to look at RSI values because these are insane. These are actually insane. So I want to see 30-minute signals that are telling me this is going to rotate down, but you're kind of seeing it. You're seeing it on the RSI. The RSI is giving it to you. Maybe you see it on a 15-minute. There you go. 15-minute looks very good here. See if that's able to curl back down. If it doesn't, you're probably going to see something crazy again from Tesla. I want to dance with somebody. I want to feel the heat with somebody. Last night we got a river talk. Powell is trending. I'm sorry, what? Banks are apparently running out of capital to buy US treasuries as of today. XME 65 calls. I mean, if this would turn up, that would make sense. You know what I mean? If this would turn up on the 30-minute, I'd say that makes sense. What did we have down here? We had the lower or higher low. Right now, you're in a 2-hour pullback, so really pay attention if that 30 minutes crossing up, but that could curl down just a little bit more, maybe go down into this $60 price point. See how the lows here kind of match up with the resistance of these highs? So I'd really like this level of about $60. See if that 2-hour can curl down a little bit deeper. Check Nvidia, it's gonna dump. I can't fully say it's gonna dump until that 2-hour really crosses over. If this 30-minute crosses over, I'll say, yeah, the likelihood of a dump is bigger. Yes. Never got nothing to lose. But I still think that could just be a pullback because I'm not seeing the signals of this is like a clear-cut downward move. But it looks like right here, 30-minute crosses down. Maybe a 15 minutes more clear, right? 15-minute, you see the divergence there. this is maybe what you pay attention to, and you see that 15-minute cross down, you say, okay, I'm going to manage the trade. But to say the 30-minute, you want to see if this 2 hour is able to rotate down. If that 2 hour rotates down, that would be not the best sign, because you already made the higher low, and then you're kind of breaking through that immediately. Yeah, see, like dump is a very relative term. I'm still saying I'm paying attention to the signals because I think you have a chance to do something like this, 116, and then that pops back up. But as of right now, you would just say, okay, a dump would mean this 15-minute rotates down and doesn't rotate up back positive. Right now, the dump could be down towards 125. It could be down towards 116. Or if it's not going to dump, we could just move sideways a little bit and curl right back up, start to break through. So there's a lot that could happen. I just want to react. You know what I'm saying? So this is a point to really pay attention. It's kind of a moment where you say either we're going to break to the upside, see some craziness, or we could see a Tesla dump. Like Tesla's more so one I could see a dump from. Down in a dump, I mean like 10% down. So this is a sign if that rotates down, that's not good news. You break this low, you come down towards 2030. Yeah, Nvidia's kind of a crazy one. Great monthly investment. Amazon flashing a positive again, not curling over on any MACDs here for the 15-minute. I like the 30, but this is where it could break. See how it's like you could see something crazy, like it could rapidly go to the upside because you're in this area where it's like it's decision time. So if that goes negative, that's not a good sign. You start to chop below this low. But if you can just stay positive here, break through these highs, you can see a big positive move up. 7 days a week. DJ. The Dow Jones coming down a little bit there. Oh, that's not a good look for the Dow. Just being honest. The VIX has not curled over on the 2 hour. Curling down, curling back up. We'll see. If this is another higher low, that'd be interesting. Higher low. Exclude the wick. I don't even think that was there. What the hell? I don't even think that was there on Friday, but say higher low, starts to ramp up. I don't fuck with you. TLT really breaking down. Beep, 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 beep. I'll probably just get out of this move. I want to be quick with it. I'll take a little loss there, get out of my investment for a second. See, managing the trade. All right, let's get out of that. All right, cool. We can be right back in, right? I'd rather lose 0.8% than lose 3% later. The Dow kind of difficult because it's kind of like trying to do what the market's doing, but it's just like not. But it has been leading at times, and now the market's going higher and it's not. So I'm kind of reading into that. I really want to see if this daily starts to cross down, because here it led the market down, here it led the market up, here it led the market down, and now it's doing this kind of where it's like, So if you're still saying it's leading the market in some way, you would say this is kind of like a dud while the SPY is going higher. So maybe the SPY is doing the wrong move right now. SPY going higher. I'm sipping to alignment. Whoa, wait a second, guys. Wait a second. No one told me about this. Where the hell is Mark? Mark, you're supposed to keep me updated on these things. Gah. That is some selling coming in while the SPY remains pretty elevated. I just want to have a good night. I just want to have a good night. Tesla, though, Tesla's just a pretty simple, like 2 hour needs a pullback is what it seems like. And I think that pullback goes to 230 for now. That's the best that I think it looks. But as that 30-minute keeps saying, hey, I might curl up and go positive, you could see something crazy happen and see that thing keep going. You have daily momentum behind you. You're about to have monthly momentum behind you, by the way. This one here, I just don't like the look of the 2 hour. All right, what are our boys over here doing? AMC now down 3.11%. Telling you the 30-minute pullback. I told you that about 30 minutes ago. We said 30-minute pullback. That's what the most likely scenario is from here. Not the best divergence or anything like that, but... yeah, fast food got too expensive and people can't even buy fast food. See if GME can turn up as well. Now, oil was interesting. Gave some signals up here for reversal. Bunch of divergences. 2 hour. No 2 hour divergence. So this could be a pop and drop from oil. Palantir about to confirm down. Kind of a flat divergence here. So because this is kind of flat, you're far away from the center line, you do still have the opportunity to curl up one more time. Right? See this kind of thing happen, like a little swing trade. If that swing trade doesn't show up, well, then you might be seeing a daily pullback. No, la la, yeah. Yeah, that's what we were watching in the SPY as well. So you're just looking for this to actually confirm, but you're kind of piling up in this area. You'll see if that distribution comes in at some point, but SPY, similar look, right? Coming down. So if that curls down, not a good sign for the SPY, but we do have a daily expected move below us. We'll see if we're able to hold up if that happens. Let's look at AVGO. Didn't this look like 2 hour pullback was coming? Look at all the divergences. So 2 hour pullback looks likely here. We pull back, we stay, like we make some tapering. This is just a random line right now, but we make some kind of tapering and then we curl up. That'd be a good look. You do something like, oh, oh. Dollar based out. Could see something crazy. If we see some kind of sell-off, the dollar's kind of hinting at that a little bit right now. Another drink. Tipping comes off. Alright. Gotta see if this guy curls back up by the end of the day. Oh, there you go, Marina. I mean, but... there you go. Yesterday was so fun. Yesterday was a good day. It was fun. Yeah, I had a good time. Yeah, I'm gonna try to spend some more time with the fam today. We're gonna go out, maybe go take the baby girl swimming. We got her a new floaty thing. She can like lay in it on her belly and swim around. It's pretty cool. Want to test it out. But I'll try to stick around for just a little bit longer at least. See if AMC is able to turn back up. We got GME. See if that's able to turn back up for a second here. What's gold doing after that big pop? We have a big drop. Going down to our level, 217.21. That's something. But you do have smart money saying down. TLT heading down. I just didn't sleep the best. That's the problem for today. I didn't sleep the best. That's always not good. Apple back to breaking even. Maybe a rejection divergence finally. This little curl here might have helped us out. Instead, Apple has some weakness at this level. Even though I believe Apple could head higher. That's the thing. It's like Apple's not at a weekly expected move yet by any means. It's just outside of the monthly, which is kind of worrisome. Alan's such a sneaky dog. Step up in our building. Up. There you go. Microsoft's the big one. Microsoft's a big signal right now. Remember, you gotta manage the trade, make sure you're seeing if that's gonna curl back up, but this here is a pretty flowy looking trade, isn't it? This little divergence right here produced that. Now we have a solid flowy looking divergence. See if that's able to actually pull back. You still have to say pull back because you're far away from the center line. This is growing up. Why do I want to listen? I want to listen to like... I kind of want to listen to like email music. That's what I'm feeling like right now. Helena, let's go. Yeah. No, he's like, I'm just like, no, you're staying all day. I'm like, oh, I wish I could today. Remember, if crazy stuff's happening in the market, we always come back live at the end of the day. That's why it's good to have your notifications on, guys. If something crazy happens, if we see some kind of flash crashing, which is kind of what you're seeing at Microsoft right now, god dang. But if we see something crazy, we normally do come, like we go live again at the end of the day or something like that. I usually hop right back on. So I'm very aware of what's going on in the market all day, and if I feel there's something happening, I want to be here to help you guys monitor what's happening in front of you. So don't think if I, leave in 30 minutes that I'm not paying attention to the market and willing to come back if something crazy starts to happen. My dog is loving these head scratchies. So give me 1 second, email, and then I'll look at SMCI, but Alan is loving some attention right now. Here's a good boy. All right, good boy. Let's go look at SMCI for email real quick. So this here looks like a little bit of a topping tail. Now you do have daily momentum with you, keep that in mind, but as you start to see 30 minutes roll over, you have to say that looks like a pullback. Now, how do we like to get out of zones? We use Aapl to talk about this a lot. You break through a zone and you retested it and then you go higher. So I believe that could be what's happening here. We see that pull back, we retested it, and then we head higher. If it's going to be more dramatic, you're probably going to see some solid selling and see this 2 hour crossover. If the 2 hour crosses over, you have a chance to break through this trend. Okay, so you don't necessarily want the 2 hour to cross over. You just want a little 30-minute pullback into this zone and then that curls back up. That'd be a great little trade setup. You want me to go live from the pool? I don't even know how to do that. Like, I don't even know if I'd be able to pull up like charts. SPY is divergent. All right, 15 minutes. What we really want to watch here. Uh-oh. So if you're looking at 15 minutes from my research, hourly charts roll over with 15-minute divergence. It already happened. So now you want to see if that 2 hour is going to get this overall pullback, which does have divergence above it. Not the best, but it does have it. So we could see a more dramatic pullback here, but 15-minute will tell us maybe. You're welcome, email. I hope that was a little bit helpful. SMCI has been a difficult one. Feel better if I stayed so long, and good night. Yeah, we had 6 hours straight yesterday, Bruce. QQQ, similar signal, and that one's confirming, so maybe we need to watch this for a second, okay? That is confirming, so now you want to see if that thing can go negative. We need the selling to increase. This is not any kind of scary selling. If anything, this is consolidation. Okay, so we need this to increase. We need this to start ramping up, come down here, get a little bounce, come down to lower levels is pretty much what we need. But since we're up towards that weekly to the top side, you'd have to say we're a little bit closer to going up than we are down. Even with this reversal signal, we have to pay attention if that's able to rotate up into positive territory. We'd really like to be at more of a significant drop. You know what I'm saying? We'd like to see a significant drop. That way you're far away from the center line and that can continue. I chimed in with a haven't you people ever heard of? I'm playing I'm Not Okay. I'm Not Okay by My Chemical Romance. Feel the vibes, people. I'm gonna do the update as far as it goes. Ooh, that's looking like some selling coming in. You do have divergence there, but you're far away from the center line for the 15-minute, but this is a sign of some kind of pullback gonna happen if that's able to cross down for now. It does have a divergence there, mainly looking at this 2 hour. If that crosses over, bad things. Right now though, the 30-minute crossing down, that could be a pullback that leads to more buying actually. As far as it goes, I'm trying to, probably later this, like during the, maybe even after this video, I might put out the video on Patreon just discussing the weekly moves. But it might be later today or even tomorrow. It's just depending on what the signals look like. I try to make my timing of that very good. I mean, technically, the SPY's already confirmed the 30-minute, aka 2 hour on the futures right here, but you see how sideways that is. For the last time, take a good hard look. I'm not okay. Oh yeah, it's more of like taking my time, more so looking at all the signals across the board and seeing if the timing is good. But it's always Tuesday or Wednesday I'm putting out that video. Sometimes it's been Mondays actually. Ba, 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 na, na, na. 2 hour was not able to curl over for volatility, so I might be in for a volatility play. 30-minute curling up, positive territory, double bottom. Possible double bottom. Ooh, a little bit higher low actually, but still closer to going positive. So this is a sign volatility can come in. If it starts to go up, we see some scaling up in the selling from the SPY. I'm okay now. Trust me. Yo, Ocean Avenue. Holy crap. That's some old stuff there, man. Let's go. Where I used to sit and talk with you. felt so right. Sleeping all day, staying up all night. Staying up all night. Alright, Spy, give us a little hint here, buddy. We would knock on the beach in our bare feet. I think the Qs just look a little bit more risky. We'll see. That's a big, big divergence there. For today, I think Nvidia at least gives us this 15-minute pullback. I think you actually have a shot to fill this gap today. I think 128 would make sense. 128. I think today that would actually make sense. I know that's kind of a significant drop, but I really think that that would be that move would make sense, and then you got to see what happens from there. Now, this is just because you have a little bit of a reversal signal, but I think you have the attempt to go like this, make a little lower high or something. Thoughts on Tesla? Tesla trying to curl up again. You see that, the 15-minute here, looking at that, because you have divergence all across this thing. So it's pretty much 15-minute rolls down, goes negative, not a good sign. But if this 30-minute can start confirming up, then you might see something crazy. And we might see something crazy again from Tesla. How high up do I think Tesla could go if that 30-minute does cross up? Well, I'm going to say about 270. I think it could hit up towards 270. That's about 11-point move. If just this thing right here curls up, that is possible. Ba-da-da-da, ba-da-da-da, ba-da-da-da. Like Amazon here curling up. If that can remain positive, Amazon could be heading up towards, I don't know, maybe something like, I think we have 206 for Amazon, if that's going to make an upward move. You just got to be aware that if that 30-minute rolls down, that's going negative, and you might end up down towards like 192, towards this low. GME, you need to start gaining some steam here. You need to go positive. AMC, need to go positive. Netflix saw that upward move. We'll see if that can rotate back down, but for now it says positivity. Maybe makes the divergence. Let's see, is the SPY? SPY's pretty much just flagging though. That looks like a flag if I've ever seen one. Not able to cross down just yet. Let's see, did the Qs cross down fully? They did cross down fully, but maybe one more move higher would be a good one. Up towards the daily expected move. All right, looks like we might just curl back up. So here's what I'm going to do for now. I'm going to keep a close eye on this stuff. We're going to take baby girl, probably go get lunch and maybe go to the pool for just a quick 30-minute dip. But what we're going to do is I'm going to keep a close eye on this stuff. And if something starts to pop off, we'll come back and watch this stuff with you guys. Because we did the long stream yesterday, got a little tired, but today we're going to be heading off about now. And then what we'll do is come back if some crazy stuff starts happening, and I will be putting out a YouTube video for you guys later tonight. So I just really wanted to say thank you guys so much for joining today. I really appreciate it. It's been awesome, except for watching Jerome Powell and how they just, I don't even think they know. I think they know the real problem. I think they know that they are the reason that the problem is there. They just want to blame corporations, but really they're the ones who allow the corporations to do it by giving free money. So other than that, looks like we got a big day ahead of us as far as it goes as the fight for AMC and GME. So we do have 30 minutes, 15 minutes even a 15-minute. You can pay attention to a 15-minute. If that thing curls up, hey, awesome. But know that I like my 30 minutes. So in order to see another positive move, 30-minute, hey, maybe we go all the way down to that center line and then curl up. Maybe we do something like this and then we curl up over time. We'll come back if things start to get a little nutty out there. And then watch out for Patreon because I might be putting out that update video today. So we're paying attention to this as well. See that curl up in a positive territory. That's what you need for GME. The only thing it needs that's kind of lagging behind for GME compared to AMC is you got to cross up on this daily. AMC has already done that. So what we'll do here is at the end of this here's what we'll do for you guys as we head off. We'll spray some Japanese Kewpie mayo on it. There you go. Get some mayo on that thing. Get that thing going for you. And then we'll look at GME as well and say, hey, let's get some mayo on this thing too. All right, guys. So I really do appreciate you guys joining today. I'm sorry that we're heading off a little bit early, but yesterday we did a 6-hour stream. So today we're going a little bit shorter because today seems a little bit less fun. You know what I mean? But if things start to pop off, I will be coming back onto the live stream. So make sure you're subscribed and you have those notifications on. Appreciate you guys being here for the day. If you need the links to the course or the Patreon, those are down in the description, and I would look at those right away if you're looking to learn a little bit about these markets. I'll talk to you guys later. Peace out.